So a quick recap about Bitcoin. Since October 2025, it has crashed by about 52%. Now it's back up a little bit, but most people really didn't understand what happened. And considering that as time goes on, the Bitcoin just rises less and goes down less, it really can be considered a bear market. So now the question is really, why did we have a bear market? A lot of people really think it's all about the halving, because generally speaking, a year after the halving, we have Bitcoin going down. It's just historically true. It seems like this is an asset that should be really focused on that particular thing because it has been right for several amounts of times. But other people were kind of confused because they thought since institutionals are now coming and since altcoins didn't really go up, it should theoretically go up with the stock market and not go down the way we had seen. Especially considering that the stock market is still rising. Right now it's still at a new all-time high. So I wanted to talk about it a little bit because there's a concept that most people don't really understand and they should apply it on their investments. It's something really well known in the institutional side. This is what they called having a dynamic allocation. So first of all, what is an allocation? Well, simply when you have a portfolio, you can decide to be somewhat aggressive or passive, somewhat an active investor or a passive investor. So for example, if you want to be really aggressive, you can hold 90% of your portfolio in stock market and maybe 10% on crypto like Bitcoin. Now, if you want to be really passive, you could theoretically own maybe 30% of your portfolio on stock market, 60% on T-bills, so treasury bills, and maybe another 10% on cash. And so this allocation is really important because, well, what happened after a year is stock market has risen a lot. For example, it has done a wonderful 20%. And the rest, your cash, your T-bills, they're still somewhere the same amount of money that they were in the beginning of the year. What happened is obviously your stocks are going to take a bigger portion of your portfolio. And what was about 30% of your portfolio is now maybe 36%. And as time will go on, maybe we have a crazy bull market, and after a certain period of time, maybe 45% of your portfolio is now on the stock market. And that's really not something you wanted, since you really wanted something passive, slow and steady, really consistent with a low amount of volatility. So what most investors do is they simply reallocate. Okay, they simply will sell a little bit of stock that they own to buy back some bonds, buy back some cash. So yeah, when you sell something, actually you just trade it for cash. So it's like buying cash. And generally, in the institutional side, there's always a particular moment when they decide to do that. So it can be every month. Very low amounts of them really do that every month. It can be every quarter. That is also less common, but you can actually see it when you look at the stock market, for example. You can actually see if the market has done terrible performance for the quarter. You can see that generally on the first day of the second quarter or the next quarter, the market will rise a little bit. And that's what happened in the beginning of March. As we could see, the market has probably lost about, I think, 5% since January 1st. And the first day, what will you see? Just on the US morning, obviously we have seen a rise of the price on the stock market, on the S&P 500. Just understand that it's just about the first day that I'm talking right now. All the pump we had after that wasn't really correlated to the rebalancing flow. And so that's what I want to talk about. This particular period is called the rebalancing flow. It can happen every month. It has a very low effect. It can happen every quarter. It has a higher effect. But where we really see the big difference is usually by the end of the year, okay, or beginning of the year. That's really where the biggest rebalancing flow comes. Now, that's also why, from a seasonality perspective, we often see the beginning of a bear market starting January or February, because that's usually the moment if there's some amount of uncertainty or maybe some concern about inflation, that people just decide to either don't buy more stocks, so buyers get weak, or they decide to sell their stocks because they don't think it makes sense anymore. So, retrospective, uh, in October 2025, since its last low, Bitcoin has done more than a 60% performance. Since the last bottom we've done in 2022, so beginning of the bull market, it has risen by about 680%. So it clearly was one of the assets that has performed the better for that period of time. So obviously, if you wanted to rebalance your portfolio on the 1st October of 2025, so the beginning of the last quarter of the year, obviously you wanted to sell a little bit of your Bitcoin. Maybe not the entire amount, but maybe a huge amount. And especially considering that people in general tend to really own a very small amount of their money on crypto. And I'm talking about ultra high net worth individuals that most of the time are directly invested through a fund. These people just don't tolerate too much risk. So it's generally only 1 to 3% of their portfolio. So if for whatever reason Bitcoin just gains 60%, obviously they're going to sell a lot amount of money. So that was really the trigger that created that big bear market. And obviously it could have gone up again. Okay, we could have had a new leg to the high, to the top. Maybe go back to visit a new all-time high. But unfortunately, by the end of 2025, because of Trump's tariffs, there was really a concern about uncertainty. People were really talking about it because Trump is just doing a lot of things that investors don't really like. They like stability, and Trump just do everything but bring stability to the market. So considering that, at that particular moment, when you wanted to sell your risky assets that have performed well to buy back some considered risk-free assets like bonds, but obviously Bitcoin was really a golden choice, really the top one choice you could have to just collect a little bit of the cash you've already gained. Now, aside from that, yes, it was really the trigger, but you also have to consider that for a market to go down, you can't just have sellers. You also need your buyers to be weak. So when the Bitcoin has risen by about 680%, when it was already a year and a half later after halving, obviously buyers were weak. Obviously, it was really easy for Bitcoin to just go down as soon as sellers would just come into the party. So we just had that trigger in October 2025. We've gone down until January 2026. After a little bit of analysis, most people just realize, we might not go and buy back some Bitcoin right now. Maybe we'll wait a little bit for more clarity. And if you just would look at the S&P 500 from about beginning of January to the end, we started to see that the momentum was just weakening. And what we've seen during all February was a range, simply. The market just didn't know where to go because there was just this growing concern about stability and if the US stock market is still a good idea to be invested in. Now, considering the stock markets, there are also a lot of concerns about the stock market, and especially the view if you're trying to invest your money on the stock market right now. A lot of people are talking about the fact that it's overvalued. I'm gonna talk about that in the next video because while a lot of people talk about how it's overvalued, they forget a lot of other things that are really the big concern with the US stocks and are really gonna help you understand where you should put your money because a lot of people just don't know where to put their money. They want to invest for the 10, 20 next years, but they just know that a big 80% drop for technologies is just right close to them. So they just don't want to risk their money. Eventually, a lot of people are waiting for a big correction right now. And yeah, that's kind of the thing, where to put your money. I'm going to talk about that in another video.